Good morning, everyone. My son had to get his good morning in there first, I guess. Welcome. Microphone check, screen check. Looks like everything's working correctly here. Don't mind the background noise. If it's too annoying, I'll just turn off the the laundry. But we need some laundry, you know. Anyway, microphone check, screen check. It looks like everything's working correctly here. Good morning, everyone. Hopefully everyone was able to rest up on yesterday's day off, or if you were trading yesterday, hopefully you had a great day of trading. Plenty of movement, that's for sure. Jeez, oh Pete. Anyway, let's jump into our normal routine here. So, good morning, SSFTG family. I hope you all had a chance to rest up, get ready for the day ahead, all that fun stuff. As per the usual, make sure to read through the right side of the screen there, the morning prep PDF. Very important to understand everything that is inside there. And then just a quick note for you all before we jump on in today. On the YouTube side of things, the stream does have between a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about at any given moment. Good morning. Morning, hey, welcome. Just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, and everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. If you aren't a member yet, you do have a few different options to check out if you're looking to further your trading education and career. One of the easiest ways is right there on YouTube. You can check out the join button below the stream, which gets you access to the extended hours room where we continue the morning room with a little bit less delay to the end of the session. YouTube members also have access to the communities area where I post all kinds of different chart setups, stock charts, analytics, and more. And of course, every member gains access to the Discord chat server, and you get the awesome badge next to your name to show your support here on YouTube, which just looks really cool. If you want to take a massive step further forward in understanding our trading approach and what it is that we are doing every day, look no further than the Day Trading Academy. And this is where you can find out how we do everything, but listen, this isn't a small little PDF guide you're going to finish in an afternoon, all right? We do have a quick start course, but to really dig in like the Academy does, you're looking at about 19 plus hours of video course material. Alongside the course, there's homework and study guides along the way to really make sure that you're understanding what's going on while you navigate the course, which I review personally. And you get the awesome DTA upgrade discount too when you're ready to go on to the top floor, the executive suite, when you're ready to upgrade to VIP. And that's what that upgrade is going to be all about. VIPs, they've got permanent access to everything that's SSFTG. The Day Trading Academy, private Discord chat, future updates, new strategies, monthly webinars, one-on-one access, and everything else. It all comes as part of the package. VIPs gain access to the fully dedicated, non-delayed stream for the entire session, meaning that they're on the fastest connection you can get without any delays from start to finish. So whether you're here for the very first time or you're one of the VIP vets over on the dedicated Zoom stream, welcome. Glad to have you trading alongside of me today, analyzing these crazy markets of ours, seeing what's all going on for today. Let's jump into some charts, jump into some news, see what's going on today, and then we can go from there. So first off, don't forget to grab your morning DP levels. Those are posted for you this morning on the Major 7. NASDAQ, S&P, crude, gold, Euro, Bitcoin, and Ethereum. Oh, I threw them backward. my brain jumped one ahead. It's always a race, but this time it stumbled a little bit. As far as the news calendar is concerned, we don't really have a whole lot going on today. We've got the initial jobless claims at 8:30, Philly Fed at 8:30. That's all done. Everything else is done. There's no more news. There's no more announcements or anything else that we have to worry about. They all came out at 8:30. Job done. Now, as we go into Thursday and kind of seeing what all is happening here, obviously, there has been some relatively large downward momentum. So let's pull up the S&P and kind of start off from here. The bigger move, and if we zoom out to the 60-minute chart here, the bigger move when we're looking out here is starting to line up very similarly to what we've seen several times before. Remember, the markets love repeating themselves over and over and over again. The last big pullback that we had was 3% off the top. The one after that was 3.59%. The one before the rally to the upside was 2.94%. We're seeing a very common theme here, where if the market wants to pull back roughly 3% or so, we usually find a bottom, 3 to 3.5%. Right now, we're at 2.87. So, I mean, as far as pullbacks go, that's about as value as you're going to get. The only other thing that we may be looking for is a double value pullback. We gotta love a good double value pullback, and that should put prices out at 2.94, so 5. Let's put double value at 5.8. Come on now. Really? Stop moving. Jeez. 5.8 down to about 6%. So, ooh, that's incredibly ominous to land on 6.66. What's 3.6? That would put us at 7.2. So let's go out to the full bracket here, just to kind of see where this major value structure pullback is going to be on the S&P. So from a double value standard, we've got 41.54 quarter on the bottom and 42.16 rather on the top. That is going to be the double value pullback. Big zone of interest. And if we look at this from a cyclical standpoint, we're also underneath the previous major confirmed swing, but not underneath the previous larger swing. This is a phenomenal swing potential setup that traders love taking because it offers up a very small risk. Potentially, even let's say they were able to get in about halfway into that zone. That upward momentum allows for, well, at that point, that'd be like a 3-to-1. There's a lot of potential upward momentum here that buyers will be buying into on double value pullbacks because the risk is so small compared to the reward. Now, if we're looking at this on a 15-minute perspective, obviously looking at that big of a dive to the downside may happen, sure. But you know, that's about 140 points away from where we are now. So realistically, is it logical to expect that? Probably not, at least not yet. The most logical thing that we would expect is that 2.87% pullback to follow along with previous structural value. All of the other major valuable pullbacks have been about 3 to 3.5%. This is at 2.87. We're more likely closer to the bottom than anything else. Now, we are hovering at a -1.5. We've got the -2 just a little bit further down, so probability is already in the favor of the bulls. But we do not have a pattern for the bulls, and that is what they are sorely, sorely missing. We'll see. Big zone of interest, though. Over on gold, after that ginormous V bottom that they put in, as expected, they did hold the higher low, higher low, higher low, higher low. Now we're going a little bit sideways. From the top to the bottom, if we go all the way across, over here, down to the impulse. Obviously, the POC is probably going to be somewhere up here, 13.3. We haven't made it up to that 13.3 area yet. Let's scoot this a little further. My data was bugged. There we go. So 13.3 is going to be the major line in the sand for the market to try to reach up to if it's able to get there. That would be the previous major POC on the impulse. Now, above 13.3, if we kind of bring this a little bit further and look at this from the perspective of developing bulls, meaning that bulls would be buying the low looking for a continuation to the upside, realistically, if that were going to be the case, we should see volume underneath price. It's not. It's still up here at 13.3. So it hasn't changed. The volume is in the exact same spot. So even if gold does go up, 13.3 is going to be a giant brick wall that they're going to have to work through if they have any hope of success on taking it any further. That said, from the perspective of the bottom to where we are now, we can kind of see what are these traders thinking. And realistically, there was a big jumble of contracts inside of here, which I don't think is much of a surprise. Those are sellers trying to get it to go lower, buyers trying to get it to go higher. This is where the fist fight took place. Actually, specifically right inside here, given the volume node. Now that we've continued back to the upside, we have the POC shifting in the short term to 1790, where the market took a valid couple of attempts to the downside, and now they have failed and rolled back above. If the market is going to go up to that 13.3 area, this is the spot that they're going to do it at. It's perfect in terms of the risk-reward standpoint because the risk is incredibly small, and the reward is huge. If they're wrong, they only have to risk, what, like down to settlement, maybe? For a reward that's like maybe 4 to 1. Maybe closer to 3.5. But either way, incredibly good reward versus risk for the longs here. It's just the POC's up at the top, so they have to risk very little to make it work, which means the probability's probably not going to be that good. Over on crude oil is continuing its cycle to the downside and driving its way lower. I mean, the way that this is kind of setting up looks really sort of vindictive and gross. It's not really fitting any channels very nicely. you know, there's this one, but then these highs are hanging out in the middle of nowhere. If you line these up, that doesn't really hold very well. It's just kind of gross looking. Now, from a cycle standpoint, we've got a very nice drive to the downside, which looks like they've got one. Actually, it was kind of messy inside there, but wave 1, wave 2, wave 3, wave 4, wave 5, maybe. They're kind of chopping around a little while and then continued back to the downside. So if we're looking at this in a more realistic sense, then this, given how choppy and gross this was inside of here, might be more like this. 1, 2, 3, two-legged pullback back down. 4 going a little bit sideways, choppy, nasty, all the way down into 5, finally making it down here. I mean, either way, even if we subdivide this inside of itself, you can still see that it was a fairly decent little sideways ABC corrective phase back up to a double top and then roll back down. This all could easily be one of a significantly larger cycle down as well. More likely at this point, kind of stands out for an ABCD. Whoops. Let's see if I can try that again. So an ABCD corrective phase to the downside would be down to $60, and that's also the -2. So, you know, and they might not get here today, but with that amount of bearish pent-up energy, another continuation to the downside, likely to find sellers hovering around this area, and that might be enough to finish the drive down back to 60. Fall all the way off of, what'd they put a top in? 70, what did they get up to, 76? 76 down to 60? Yeehaw. Crude's still a roller coaster. On the euro, driving our way to the downside. I mean, the big thing that we saw was the bulls tried, which was this very valiant attempt, and then over the weekend it just got obliterated. Excuse me. I think I caught the sneeze before I blew everyone's ears out. So the big thing that we had here on this drive to the downside of the impulse was the POC that was up at 18,465. As the market continued a little bit further forward, they had the higher low, and no POC shift yet, no POC shift yet, until right there. And that's why I say this was a very valiant attempt from the bulls, because realistically, that was the POC shift down to the bottom, they broke above it, and that's an incredibly strong rally to the upside. I mean, honestly, every buyer on the planet is going to be looking to buy into this move with the assumption that it should be able to make another leg up, and it didn't. So the fact that it didn't is a surprise move, and usually with surprise moves you get 2 legs. 1, 2. Now, with that secondary drive to the downside, these do seem like maybe they weren't perfectly measured. That second portion maybe fell a little bit short. Let's see here, just the impulse. No, actually, they were pretty darn close. Man, they were right on top of one another. So with that POC attempt of the bulls trying to go higher, look at where the market rejected off of when it came back. Now, you tell me, what do you think happened right there? Now, I wasn't trading yesterday, but if you were watching that area, what do you think? You know, to me, given the context and such a strong bullish attempt to the upside and the bulls getting obliterated to the downside, I think the jump ship at break even. And given the response there, I think that's pretty fair to say. So given the break-even exit of all the longs that were stuck, had the surprise move to the downside, they were the fuel for the second leg down. Funny how that all works. They became their own self-fulfilling prophecy against themselves. Either way, we've got the break-even traders that exited, causing the secondary dump to the downside, and with that dump lower, we now have 2 continuation legs lower. Lately, we've been seeing them show up in 3s. That would also fit pretty nicely with a wedge, and actually kind of a spike and channel-ish type pattern going on too. So we've got some resistance waiting at around those 17,200s. If we continue this POC further, though, and kind of understand what's going on, we can see that they did not change. And in fact, they bought so aggressively, they shifted the POC up. So the only way you would have seen that is if you were watching the impulse POCs. That's why I watch all of them. That's a major zone of interest. It rejected back down and pushed lower. So these longs who were up at 17,680, they could still be stuck. They bought too aggressively, and now they're underwater. Sellers are still in control. Over on the crypto side, we've got a relatively obvious pullback. I mean, you kind of expect this, right? The one thing that stands out very obviously that we have not had yet is a trap below 44,000 that would envelop that previous larger swing, confirmed swing, but not break the next swing underneath 43,000. So a lot of buyers are going to be buying in the 44s with a risk of like 42.5, risking, maybe $1,500 for an upside potential of, initially back up to like 46,000. But realistically, the next objective above that, 47, and then those longer term targets, if it does want to break off through the highs, up into the 50s to 52s. We have already taken out the major scalpers target up here. We were talking about that, I believe, on Tuesday or maybe even Monday. So there's no necessity for the market to continue back to the upside, and in fact, we're not really even expecting it to. But if the bulls are going to try, this is the spot that they're going to try in. I almost put the order flow on there. That was almost an accident. As far as Ethereum goes, they have had the trap underneath the lows, and that's what they're finding support off of. So buyers are already triggering on the Ethereum markets. Bitcoin has not found that trigger. Let's jump over to the NASDAQ. Now, on the daily, this is where things get a little bit hectic, because you remember the last time we had a big bear bar that was not the high, that ended up being the top for about 2 weeks. 2.5 weeks, actually, a little bit longer. Normally, we were talking about a week to upwards of a month we've seen historically, but usually it took about 2 weeks. In this case, we landed up to the top. They tried breaking through the highs. They tried again. That's 3 times. They failed. We now have a very strong bear bar down with follow-through. I mean, this makes a lot of sense for sellers to try to pull back. And what more logical pullback area than that previous swing? So like we've been talking about, we are on a very nice value pullback zone. From the very small term, right? If we're looking at the small term for the NASDAQ, 3.67%. So far, we're at 3.04. If we go back historically, this pullback, I believe, was 8, wasn't it? Yeah, 8.18. And then we've got the big honkers over here at 12.2. Now, before those pullbacks, if we look historically, again, just to gauge what the market typically does, 6.4%, 3%, 3.6%, 3.6%, 7.3%, 10.6, and then we're starting to get into those big meaty pullbacks, 14. So we're seeing a very common trend, right? Something very repetitious happens here on the NASDAQ. 3.5% pullback, 3.5% pullback, 3% pullback. If it's going to pull back further, double value, 6.5% pullback. If it's going to pull back really far, double that value, 12%. So the pullbacks are either landing at about 3.5 to 4%, or doubling that to 6.5 to 7%, some out into the 8s. We know the NASDAQ, it likes to overreach. And if it's going to break below that, usually 12 to 14. We'll say 12 to 15. Right now, we are at 3.04. We've got another 0.6-ish % to go until we're hitting the full out structure, but we've already had a previous 3.04% pullback. What's to say this isn't the bottom and it can go back up again? We have a top-weighted POC. Sellers are definitively making an attempt here, and there's obviously some backlash from the bulls, potentially even getting stuck up at the top. But like we've been talking about, I don't think they're stuck up at the highs. I mean, realistically, roll this back a little bit and understand the overall move. Because remember what happened initially. We had this POC where the sellers were trying to get that dive to the downside, and they failed. And when they failed, what did they do? They got out of break even. So if we roll this forward a little bit, and we see that breakaway move, they put in a top-weighted POC here as well. The market was able, was able to dive down about 8% with that top-weighted POC. But once it made it back above, alligator's mouth snaps shut. You've got very little time to get in, and it's gone. So my concern, right? My concern is that, well, from the bottom to where we are now, we have a top-weighted POC. The last time that happened, we had an 8% drop. A double value pullback from here would be about close to 7%. So 7 to 8% here as well on the NASDAQ. We were just talking about double value pullbacks on the S&P. On the NASDAQ, they line up as well. There are a lot of things that are throwing some words of caution out today. Now, if we look at the nearer term in what's going on the 15-minute perspective, we can see that we've got a nice dive to the downside where the market has been making those lower highs over and over and over again. They held out of that sell zone. Again, I really wasn't around to trade much of that continuation down, but they did have this drive down lower and a very nice breakdown. There was a very short term, right at the end of the day, opportunity to sell for the last 30-minute dump. I exited a scalper's target, but it did go. It went a lot. It would still be in fact. Hindsight 2020, right? So with this continuation to the downside, I mean, realistically, a lot of sellers are going to be hunting for something. And we already know that they're going to be hunting for that double value pullback. But another important caveat here is that we've broken underneath that major impulse POC. This is what the bulls needed to hold it up. Every time we've broken one of these areas, the market comes back, utilizes it as resistance, and then finds a huge move. I've got some concerns. All right. So the market's sliding its way down. We've broken underneath that major POC. If we drive this further forward up to the next high, then technically speaking, we have our valid attempt from the sellers. So for the sellers, this is what they need to see to get this drive going. And if they are able to, then they have a lot of downside momentum. This is also what we were talking about the scalpers targets just a second ago. This line, this green line, that's the scalpers targets. So the fact that those are hitting and now we're diving a little bit lower really almost makes me believe that if we are going to pull back a little bit further, they may be looking for a confirmed POC retest, something along those lines. And the one consideration, did they actually hit it before? Oh my God, did they actually hit it? I can't see. No. So that 73.75 was missed. You'll notice right there. So the fact that they never hit 73.75 and turned higher all the way up to this objective, I have to assume that every long that was in this has gotten their objectives, their targets filled. It doesn't make any sense for this POC to be the one that holds. Although, again, statistically, we are on top of a double value pullback. We're in a major zone of support. We're at the structural range lows. There's a lot of structural reasons why it should work, but in right consciousness and right mind, I cannot give this high probability because it's just not there. The market has way too many signs of failure up at the top, and a larger pullback is looming. Although I would love to be a buyer here at 73.75, I think the only safe way to do it would be options, and there's still another 6 minutes until it's open, which would be like out of the money's way up in the sky. A nice hedge for that, side note, would be out of the money's at the floor for the double value pullback too. Typically when we have these POCs that have that strong break, they come back and they miss. Go back up, they wedged, very obvious. Nice wedge breakout to the upside, filled the target. Filled the target if they didn't take it the first time around. Missed the target. Came back, gave them another chance to get out. Now they're underwater. So, I mean, realistically, if it does go up, I can't see it going much higher than like 14,900s, 950s, maybe. Still looking for that double value pullback. Makes a lot more sense. But I'm kind of curious too. Oh, this is already the 60-minute. Okay. Even if we go back just a little bit, it's still there. Man, the problem is, though, if they go further than that 60-minute correction, where's the next dip? That's back at 14K. Or really, the POC, what was that, 13,800s or something like that? Hey, hey, welcome, welcome. Good morning. Bram, Ace. Not a slot, welcome. Everybody else, welcome, welcome. Hopefully you're all doing well. I'm just sitting here waiting for my order flow to calculate. Well, anyway, I don't remember exactly where it was, but I know there was a POC in the 13,800s. I'm not going to sit here for an hour and a half waiting for this stupid thing to load. But I know it's down there at some point. It's so far away that it's not really going to make much of a difference where we are now, so... We'll see what they want to do. Going over to the 500 tick and kind of seeing where we're at overall. Obviously, we've got a very nice bearish cycle to the downside, but notice this big, thick purple line. That big, thick purple line is, well, that should be familiar. That's the bottom of that giant bear bar from a couple weeks ago. The one that we put that purple line on the top, and it rejected off the top. You know that one. Yeah, we're at the bottom of it now. Got 9:28 right around the corner. That's the next big time slot. I mean, honestly, so far this morning, there's not really a ton going on. At least not as much as I thought there was going to be. Well, I mean, from the beginning of the day, we've got... Where was the... Okay, so this is a confirmed top that we can use, at least. So from the cycle to the downside, they've got an L3. Typical L3s are going to hold L1s. It does. They pull back to another L1. Then they'll be looking for the third. That was the third. Then they're going to be looking for... Oh, they got a fourth. Then they're going to be looking for an L2. Now, here's the concern. After an L1 sequence like that, the usual next pullback is just they're going to climb the ladder, right? That's what they usually do. So L1s revert down to L2s or up to L2s, depending on which way you're looking. The L2 was here, but it went up to an L3. That's incredibly disappointing. It's not to say that the short side didn't work, but look at this realistically and take the assumption that computers, algos, they'll sell at every single one of these, right? 1, 2, 3, 4, 5. Couldn't get the sixth. So out of those 5 entries, where is their average? Well, their average would be right in the middle, right here. Right? So out of those, if we were to measure that, just to see, are these algos just scalping? Oh. What do you know? Weird. It's almost like we could already tell. Usually when there's disappointment, something changes. Right? It's like throwing a big log. When you throw a stick in the water, right, and you throw a stick in the river, it's not enough to do anything. It just kind of bumps off things, but generally it just goes down. So small little obstructions, not a big deal. It can go through a level, not a big deal. You're just throwing a stick in the river. It'll just float down just like everything else, no big deal. But you throw a log in, and sometimes that log's big enough to jam the whole frickin' thing. And that's what happened here. They threw too big of a log in, they got too big of an objective to the downside done, and that log jammed it up. They're having a hard time getting it to go down, and they got stuck. So when they got stuck, they start exiting. This is the reversal context that traders will be looking for. The timing is absolutely horrendous. I mean, we're right into the open. So, I mean, anything can happen here. I'm still looking for a bigger pullback. But this type of sideways action, this is what bulls are going to be looking for. All right, we are at the open. The S&P is opening with a outside gap down. Market is attempting to rally above the highs. So far, we've got an L5 off the top with a huge blow off. Usually L5s are going to hold L2s. Massively disappointed there as well. All the way down to the L4. But we've rolled all the way higher again. So, I mean, hey, if they are able to break a new high, we might be starting an L1 trend. right, very nice, strong breakaway move. Kind of curious, the beginning of this move technically was the entire session after the market had already closed. Yeah, 14,750 is the zone of support that they're buying off of. If we continue this further forward, it'll probably be... Oh, it's still at the 750s. Whoa! Okay. All right, well, the bulls are giving it a shot one way or another. Beautiful continuation to the upside. Settlement for the S&P is not too far away, 88.5. Not quite. Watching this as a zone of interest on the NASDAQ for bulls to pick up into. Bulls are trying to get the rotation back up, but so far having a little bit of trouble. There we go. Nice continuation to the upside so far. Very strong bear bar, but absolutely no follow-through so far. I got a lot of wicking going on. There we go. They got to pulse through this. All right, too much of a failure back down. Man, I got bottom filled on that one too. Yikes. I hit ask to exit that trade when it was at like a positive 20. And I got filled at a positive like 7. Jeez. What a horrible fill. Yikes. All right, well. POC so far is at 1809. I got an absolutely terrible fill on that one. As soon as I hit ask, it tanked like 10 ticks. Ugh. All right, well, they do follow through, although, man, I got nailed hard on that one. Well, not hard, but you know what I mean. Frustratingly, at least. See what they want to do with this new high. We do have the L4 rotation into an L1, although it was incredibly vindictive. More bear. Ooh, man, that is a nasty bull to bear bar transition from up top. Yikes. Whoa. Okay, so if longs were long and they see a transition like that near settlement, it might just be early profit taking, right? I mean, the S&P is closing above their 77, 75 POC. If we look at the 5-minute POC on the NASDAQ, it's at 809. They're above it. They're trying to hold it, so they've got a shot here. They do not really want to break underneath this, though. This is very similar to what happened the last time around on the purple line up at the top. Remember the last time the market came up to that purple level, they cycled above it. This is the top of that big bear bar. Came back underneath it, held inside, and then just absolutely got obliterated. They came back, got absolutely obliterated. So now that we're down here, the market tried breaking underneath, and we've now flown back up. My first assumption is look for support here. But this is a heck of a drive down. They are pulling back to the L2. Jeez, the entire thing, too, is at 14,765. That POC's way back there. The measured move puts it right back to it, too. Holy crap. Very strong potential twin reversal. Same thing for the bulls that the bears just had, but the bears have the follow-through. Market pulling back a little bit further. Getting closer. He's just kind of pinging around, not really doing anything here. Bulls attempting to make a move up. The second 5-minute bar on the S&P closing above 77.75. Very interesting. Second NASDAQ candle, though, closing heavy underneath at 809 is still the POC. Starting to dip back, creating a secondary POC and hovering. Okay. Chopping under it for just a second, now dipping back to the 74 quarter with a little bit of a pop. Still just hovering. Not breaking down, not breaking up, although we are back to that purple level. That's not going to help anything. Still just pinging around. Little more bullish continuation, but not a ton. Well, might have spoke too soon there. Oof. POC still just bumping around 14,790s now. Starting to look a bit more bearish, though, I gotta say. What do they do here? There we go. Now we're getting some proof. Jeez, that was a fast snapback. I didn't have a chance to even respond to that. I literally blinked and I looked back and the wick was gone. I didn't even have a chance to respond to that little pullback right there. That happened crazy fast. Nice little snapback here for the bulls to try to re-up for the continuation rally up. Scalpers' objectives jumped up, immediately taken out. Wow! Holy crap! This thing is jerk. Whoa, 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 whoa. That bear flip all the way back down. That just nailed every bull who didn't take that scalp as a scalp. All of those bulls are underwater now. I couldn't even respond to that. See if the bulls want to jump ship and push this back down for a quick pulse. Beautiful pulse back down again. Fantastic flip-flop off of that POC. We've got some really sideways short in-out moves. There's not really a big swing or anything going on yet, but they're definitely trying to build one. Remember where we are location-wise. Location-wise, we're in that double value pullback. It's a huge long-term swing zone for traders who are looking to buy that 3-4% pullback on the day kind of thing. Nice rotation back up again. If the bears didn't take that as a scalp, they may be stuck now. We've got psychological warfare going on. Yikes. Right back up, bouncing off of that 74 quarter area again. now popping back up to a new high. They're still attempting to continue this hold for the continuation up, but we got a little room yet. Maybe the 870s, 868s. Beautiful continuation up. It's not really off of anything structural, though. We did have the L4 to L1 hold, which is a vindictive SOB, but now we've got a bit more follow-through, and what are they at now? They're at an L3. That doesn't prove anything. L3 just tells us confusion. If they break to another new high, that's strong, not like boop boop, not like a little ping, but a good break, then we may have another L1 trend beginning to form. But for right now, I don't necessarily agree that we're in a range per se, or, well, I guess it depends on the perspective, right? If you're looking at the 60-minute chart, then yeah, definitely. Where we are now, though, I feel like we're in a corrective phase before either the bears make one more attempt off of resistance and fail, and we roll all the way back up, or the bulls take this with another V-bottom off of that value pull. At least that's where I'm standing at the moment. The continuation that we've got right now, to me, would suggest that the bulls have taken over. The 14,785s have shifted. The POC has shifted. We have a double bottom off of the purple inside line at 74.25. Again, like I've been talking about all morning, there is every reason on the planet for options and everything to be looking for long moves off of these lows. From the futures perspective, I mean, I tried. It's just too herky-jerky in here for futures. I like holding onto the options a little bit longer to allow this to kind of play out. But long-term probabilities in terms of like sitting in a -1 or a -2 or something like that, really don't have that. Got like a -0.5. So, I mean, I'm not looking at this as a huge move, more of a scalper's move, even though it is a huge scalp. Just to reference what I'm talking about as far as scalpers moves. If you heard me clicking the button a couple minutes ago. This is the scalper's target. I just like it more in options. Those out of the monies are another one, but if I mean, yeah, that's a good question. So if you were looking at out of the monies, would this be a favorable zone of interest? I guess it depends on how far out of the money you went, because it might not have gone up by much in terms of valuation. If you went, like if you took an out of the money at 15,108 and it went up to like 14,815, you might have noticed like $1, you know? Like it really depends on how out of the money you're going. For me, when I say out of the money, I like keeping it in context of the day. So if I'm looking for an out-of-the-money move on the day, I'm looking for out-of-the-monies, you know, assuming at the time we're down here, I'm looking for out-of-the-monies up here. You know, something that's still feasible to hit during the day. It's still going to cost. It's not going to be like a $30 trade, you know, but it's also going to have a lot more return when it moves up that little bit. Market's pulling back. They did not make a new high. This dip that's happening right now is either the last dip for the bulls to get in this thing and we don't come back for the, well, probably the majority of the morning, or this is a failure from the bulls and we cycle underneath 785 and we don't come back until we hit the bottom. The only caveat is 74.25 hanging out, but probability does not favor the bulls here. We don't have the wind in our sails. We just have a pattern. We have a POC. One or two things isn't good enough. I need 3, I need 4, or if I'm only going to take less than that, then I'm going to be scalping. Right? I've got to have some good reasoning if I'm going to be holding on for longer than that. Nice bullish continuation back to the upside. Bulls are trying to hold this thing. Nice bullish continuation. If scalpers are going to be picking it up, I didn't get a fill. Unbelievable. I didn't get a fill for that scalp. I tried buying underneath the previous bull bar, and it missed me. It didn't fill me, and then popped up and hit the scalp target before I even had a chance to think about it. So I had to cancel that one. I tried buying underneath that previous bull bar for a continuation dip, though. Given the bear bar that did solidify, if I did go long, had it filled me, I'd probably be exiting it around break even, though. Failure to continuation up, that's not what I wanted to see. I guess in hindsight, kind of glad I didn't get filled, but it still really looks like the upside has the more potential. Ugh. At least one new high. That would a new high into settlement would at least give it a 5-wave structure. It's a corrective 5-wave structure, but it's something. You could you could also narrow this in a little bit, which would explain why we're going so sideways. But it starts detaching away from it too much. We've got 10 o'clock around the corner. Not too far away. Still just hovering. Nice little wedge going on inside here. That slid back fast. Bears continuing to the downside. That bear bar is either going to be a massive trap or the beginning of a move down to like 785. If we weren't above the POC, I'd be more inclined to take it. Just kind of bouncing around, not really a whole lot going on. Still in a wedge. Man. Still in a wedge. This is incredible. Perpetual wedge. Let's see if they can break it this time. Nope. Double top is to the tick. Gotcha. I mean, it did look like the Bulls were taking control. I still have to assume they're in control, right? I mean, we haven't seen any dents in the armor or anything like that breaking underneath the 785s or anything crazy, so... Looks rangy to me. Yeah, it's... Before, I wasn't so on the same page with you. Right now, though, yeah, I'm definitely there with you now. You were just a couple pages ahead of me, that's all. Let me read ahead. Come on now. Once the market... I mean, realistically, it looks as though they're still trying to get this supportive bounce 14,800s. And given the fact that we're trying to complete this 5-wave cycle to the upside, it feels like we're trying to get that final push, that little right at the top. And maybe that is to get to like 36 just to finish the job or to hit the settlement or something. But it just feels like there's an objective that's not done. Otherwise, why would they put this much of a fight up when there's so much space underneath them that's open? You know? It just... Hey, Danny, how's it going? Welcome, welcome. Still just kind of herp-derping its way up, though. Here everything sits. We've got a minute until 10 o'clock. Feel free to get those last questions in, and then we'll start transitioning over into the extended session. Give me 1 second here. I'll be right back. All right, we're back. Sorry about that. Bulls still holding the 14,800s. Looks like this is their chance to get that last tap. We are also going into 10 o'clock, so feel free to get those last questions taken care of. And then we'll switch over. There's the final move. Or potentially the final move, I should say. We don't know that it's the final move yet, but this does complete the 5-wave cycle. Yeah, for sure. Trust me, man. I would much rather be in front of my computer trading than dealing with all the goings on. But we're getting there. Still long in the S&P. Nice. Keep it going. That thing's ripping. We're back above settlement now. That was the main objective for a lot of traders. Now that we're continuing up, honestly, until they shift the POC, I have every reason to believe that the longs are going to stay long. What's going to hold them down, you know? It's just, there's nothing really in their way anymore. NASDAQ's got a little room to go yet. Another maybe 30 points. All right. Well, I'm not seeing any other questions coming in, so that's going to do it for this one. We are going to be moving over to the extended session for a little bit, although my son is home with me today while my daughter's at the sitter, so it might not be that long. And honestly, part of me is thinking that I want to just keep this morning session going and do the extended session like tomorrow to end off the week with it, because it doesn't make a whole lot of sense where we are now to transition over just to end in another like 10 minutes. So given that, instead of moving to the extended session, I'm just going to keep this one going for a little while longer, because honestly I doubt I'm going to have any more trades, and like I said, it doesn't make any sense to transition over just to close up shop. We've completed a 5-wave cycle. I mean, there's nothing really of interest happening right now at this point in time, and the next question then would be, is it worth putting any risk on? And where we are, the only risk that I can really see would be to the downside for now, but we're not in a logical point to go short, and we don't have enough proof to go short, so kind of in no man's land. So far, the market's holding that value pullback we were talking about at 3.04% on the daily. Not much happening yet. We got a pop above settlement starting to creep back down underneath it. Looking across the field here and seeing what's going on, we do have a fairly decent little bounce off of the Bitcoin and Ethereum lows on settlement. That's really about it. Gold's kind of pinging back off of that 1790 POC area and rejecting back down. The bulls had their chance and now they've lost it. That's going to be a problem. And it certainly doesn't help gold being able to fall with the, you know, with the market going up. I haven't done a whole lot of damage this week. It's been kind of a light week, really. But if we look at the numbers so far, let me see here. This is where I'm at so far, from the 16th to the 19th. I've only had 19 trades, so I mean, you can definitely see the trade setups and everything. I mean, realistically, the one big thing that we've got, average losing trade of 3, that was probably just a break even that I got slid on. So pretty good week, all things considered. Just no real huge runners or anything to get it going, but hey, who cares? If it's a good week, it's a good week. Oh, thank you for the question. They're doing well. They're still, I mean, it's an absolute mess of debris that's still left over. They had a big old, it's not a backhoe, it's the thing with the alligator mouth, the two, like, it clamps down on stuff. I don't know, usually see them in like a dump. But they had that trying to, a grapple, thank you. I'm not construction inclined. So we've got the, they had the grapple out there lifting out some of the intact bigger stuff to try to rip it out. And of course, anything that's been annihilated and burned and all of that, literally annihilated, just kind of disintegrates. So it's a mess. I mean, you grab it and it falls in half, and then you pick this up, and that one's, it's just a constant battle. But they're getting there. They're getting there. They're taking care of all the insurance stuff, so there's not really much that we have to do, which is kind of nice. But they're getting there. They're getting there. It's still, it started back on fire a couple days afterward, while they were cleaning everything out. So it's still, I don't know if it's smoking today, but it's been smoking still. So I mean, yeah, I laugh about it because there's nothing else to do. But you know, they're getting there. It was the transformer that got hit by lightning and totally went out. So the transformer that was across the street, which is supposed to transform the electricity from, you know, power line voltage to barn voltage, yeah, that didn't happen. So it just went from power line voltage straight to the barn, which lit the whole thing on fire. Immediately killed 5 horses, instantaneous. With that amount of voltage, it's done. None of them were babies, which is good. And 8 survived, which is also fantastic. One of the babies ran away and came back, so we got that one back. It's not been an easy thing by any means, but all things considered, it's going uphill, I guess. Not quite at the peak. Long ways from the peak. So, but I appreciate all the well wishes and all the patience over the past week and a half. It's been an absolute train wreck. And then on top of everything else, we've got school next week, which starts for the kids. Like, what? We're getting there. So again, I appreciate all the well wishes. They appreciate all the well wishes. It's what a time. What a time. All right, I'm not seeing any other reasons to put any more risk on the table, and as it stands, it's been a really good day. Not really any runners today, and I say really good. That first trade of the day was a vindictive SOB, but you know, it's there. Yeah, exactly. I'll take any kind of forward progress. So the upward momentum that we have going on here, the first trade of the day was kind of a disappointment. The second one was mostly just scalping. The third one was scalping the failure from the earlier scalpers. That's it. It's all just scalps. So. What happened? I want to squeeze a minute more out of it. Yeah. My our life friend is what we call them. We've been friends since like kindergarten, forever, literally kindergarten. They had one of the transformers in the most recent storm that rolled through. I don't know how everything happened, but the lightning, I guess, hit the transformer, blew the transformer out, and then that electricity without the transformer went straight to the barn. And they have their barn in like an apartment area that they had built off like the back of the garage. All of it was just gone. The garage, the pole barn, the barn, everything. So yeah, it's been a bit of a mess, but we've been trying to. My wife has been over there an insane amount. Basically, as soon as she gets out of work, she's over there helping. It's it is what it is. With friends that have been around for that long, it's tell me what you need, I'll break myself in half to do it. If they've been around for that long, there's a reason, But day by day, it's all we can do. It's all they can do. We're just there as support. So, all right, that's gonna do it for real this time. If I missed any questions, you can always shoot me an email, jhb@ssftg.com. Not going to do the extended session today just because, honestly, I don't see a reason to put any more risk on the table. I think the risk happened last night or this morning at 4. There were some scalps. That's about it. So hopefully you had a great day, and we will see you all back tomorrow morning, all right? Rest up, and we'll talk to you all then. Thanks. Bye. Once I can find my button. Hang on. All right, there we go. Thanks. Bye.